Well, hello, everyone, and welcome back to the main stage. Our next session coming up is we're going to be looking at what it means to be in the age of the digital builder. I'm Lisa Moyle, Director of Strategy at VC Innovations, and for this conversation, I'm joined by Ian Johnson, Managing Director, Europe at Marqeta, and Cyril Sheesh, Co-founder and CEO of Lydia. Ian, did you want to start us off to tell us what you mean by the age of the digital builder and what that means for financial services?
Yeah, sure. Thanks, Lisa. I guess so. If we think about how technology's evolved over the years, and I'm unfortunately old enough to remember the days when if you were a technology provider or platform provider, you would be trying to convince organizations to use your technology through the power of PowerPoint slides, long technical documentation, and hopefully a persuasive salesperson. And as things have developed through the internet and through lots of disruption in various different industries, not least of all financial services, what we find is that digital builders really demand the ability to be able to launch quickly, to iterate their products, to be able to fail fast, and be able to continually evolve what they do to take advantage of market opportunity. And quite frankly, in order to do that, digital builders demand a different type of technology in order to do that. So rather than have a mentality where people would present endless amounts of slides, it still didn't tell people like Cyril whether or not they could trust the technology. You know, digital builders are more used to working in an API-driven environment. They're used to partnering with other specialists in their space, so they don't look to build everything themselves. Because of APIs, it makes it incredibly easy to connect to other services that ultimately allow digital builders to create, you know, is essentially at the heart of what digital builders are trying to do.
Thanks for that, Ian. And before we turn to Cyril, I just wanted to remind everyone that's watching, if you have any questions for either of them or comments, please just put them into the chat and I'm sure they'll be happy to respond. Cyril, thinking about what Ian just outlined and what it means to be a digital builder, could you kick us off maybe with telling us a little bit about Lydia, what motivated you to found Lydia? What particular gap in the market were you looking to meet, or problems that you were trying to solve?
Yeah, thanks, Lisa. Yeah, sure, absolutely. So basically, Lydia is a mobile application that you can call a super app for money, or a digital hub for financial services, mobile hub for financial services. So you will basically find inside of Lydia what people could call a current account and all the various payment methods that comes with them, but also a marketplace of financial services and connecting services that we're offering to our consumer base, which today is about 4.3 million users, mostly in France and developing in several countries outside France, but within the Eurozone. So the idea behind that, when we launched Lydia in 2013, was that at some point we will all use our mobile to do pretty much everything, and that everything including every daily financial services we use. And really, it's something that was very clear when you were looking at the time at what was happening in Kenya and what was happening in Japan, which were very, very different situations in terms of equipment, in terms of number of people with a bank account. And if that was happening at scale in these very different geographies, it meant it will happen everywhere, which is currently what's happening. We do everything with our mobile. The need, though, was that although you had banks that were basically migrating their online bank to mobile interface, it's not what people are expecting. What people are expecting is something that has the same level of quality and mobile design and frictionless experience that you can find in the best mobile services like the Spotify and the Netflix and the Uber of this world. So basically what we wanted to build with Lydia is a world-class mobile financial services hub, not a good mobile interface for a bank, because we were not a bank and we still are not. And this is exactly what we're building every day. It's difficult, very difficult. It's a lot of effort, but it certainly helped grab deal by people like Marketa and other partners that bring amazing bricks and API to build this huge castle.
I like that description of that castle of financial services. Ian, I mean, thinking about partners, as Cyril just mentioned, can you maybe tell us a little bit about how a partner like Marketa would provide those bricks?
Yeah, I think the first thing to say is that, you know, Marketa exists in the first place because of people like Cyril. So, you know, when Jason founded the company, the original idea was not to do what we do now. Originally, we were going to launch our own card programs. It was only when building those card programs out, which we did successfully, Jason came to the realization of just how very difficult it was to work with the technology providers that were available at that point. And he decided that the better course of action, the bigger opportunity, was to provide the essential infrastructure and tools that companies like Lydia would use to build their innovation on, so that we weren't the people who were creating the beautiful customer experiences from a consumer point of view, but it was our job to make sure that, and still is our job, to make sure we give companies like Lydia and many others the tools they need to do that. So, you know, the journey with Lydia has been a great one. We've always had a very strong relationship. We've also had a very open and candid relationship, which we welcome. And that means that all of our customers, one of the key things is that we have to be an organization that listens to what they have to say. And I know that sounds really obvious, but in our circumstances, it's about people feeding back to us about the areas where they find friction in the way that they do business with us, the way that they build their tools. So if we think about the journey with Lydia or with any of our customers, we give everybody instant access to a sandbox where you can start to build against our open API set. We have extensive published documentation, which means that innovators can go into our website by simply registering an email address, and they can start to build and test their ideas. You know, firstly to see if they work. So just this customer experience, I imagine, for example, issuing a virtual card, will it work the way I anticipated it will? But equally importantly, do I want to build this company and this product using the Marketa technology? And for us, that's been an invaluable tool, because if you believe in the technology you've built, we believe that you should make it available for people to try. And that's a mindset that we've had. Not everybody thinks it's a sound mindset. Some people think it's crazy to publish all of your API documentation online for all of your competitors to look at. But for us, it's been a huge benefit. And we continue to focus on how we can improve the developer tools we make available to companies like Lydia.
Cyril, thinking about what Ian just outlined, this set of tools that are adaptable to the modern world, and the elements of what goes into a good working relationship, when you're choosing strategic partners, how do you evaluate them to ensure that they can deliver both in the near and longer term against your vision?
Well, as you said, it's important to look both at the short and long term, because what we do at Lydia, we're building a platform for the long term. We're here already available for 7 years now, and we intend to be here for the next decade. So we need to build, as I said, this castle, this big platform on very reliable building blocks. And one of the first things we check is, of course, the quality of the company we partner with. Will it be here for the long run? Is it a solid company? Is it well financed? Is it making a lot of money? Is it, I mean, it's very important. We don't look for great partners for 6 months. The investment we put in integrating a partner into the overall platform is certainly more than 6 months. So we just can't do stuff for 6 months. The second thing is how much this partner will bring us in terms of agility and capability of delivering not only the best possible features now, but also to invent new ones. And that's what we've been doing repeatedly at Lydia. We create new features and new experiences that don't exist anywhere else in the world. To give you an example, today we have a Visa card that is issued with Marqeta that you can connect to multiple Lydia accounts. So it could be a joint account, it could be a saving account, or it could be your current account, and they're all visible inside your Lydia app. And with the same card, you can spend the money of these 3 accounts. It's very unique, and this this capability that we have to invent new experiences is suddenly also relying on the capability that our partners provide us with this flexibility in their platform, with this agility, which is critical in building new platform and new product for the coming decades. So it's important that they have a solid platform. It's also important that they have a very flexible platform. And finally, it's critical that they have a very agile mindset. So it's not only the platform, it's also the people. The people are key to any relationship, business relationship, but it's even more true here since we're talking about being creative. So if it's only us creative, it wouldn't work. We need to have the same level of creativity and adaptability on both sides of the relationship, which certainly we're demanding customer, and Ian can testify about that. We've been pushing for new stuff again and again and again, even before we actually launched. But that's our DNA, and we hope we're going to stay like this for the decades to come. And hopefully, Marqeta responded always with a lot of again, agility and speed to these requirements, and they also help us shape this requirement into something technically sound, which is, of course, incredibly valuable for us.
Would you add anything to that, Ian? Perhaps picking up on that need for agility and constant evolution, and the need to constantly kind of up your game to meet your partner's changing demands?
Yeah, I think if you're in a business like Marqeta, where you get the most enjoyment and satisfaction is from your customers' success. And I know that can sound trite, and everybody can say that, but in the nature of the industry we're in, you can see and understand how the things that you've built and how you've reacted and been flexible and nimble, how those things have translated into something that's generally available to the public, whether that's the business community with SMEs or whether it's the consumer community. You can actually see these things in action. And admittedly, if you don't work for Marqeta, you don't understand the bits that you did in the background. Well, I'm sure that most average everyday person has no interest in issuer processing, but from our perspective, these are the little wins that you have each day by knowing that you did those things. And for example, when a customer launches into a new country, and we know that they've done that using our APIs and not having to have very expensive projects, and we start to see their first transactions in a new country, these are the things that we get excited about. I mean, it's pretty geeky, to be honest, but those are the things you get excited about. So when somebody like Cyril or his team is demanding change and more flexibility, we understand why it is. And we understand that if we do it, we'll be able to see why it was so important. We have to see it in action, which is, as I say, that's why most of us come to work each day from a Marqeta point of view.
Thanks, Ian. And I would just say in response, not geeky at all. And Cyril, picking up on a few points that Ian made, and you mentioned open APIs, and this is an event looking at open finance. Can you tell us a little bit about how important they are to you and the company in your current technology construct and your future journey?
Yes, it's about the open world. After all, it's not only the open API; it's pretty much open everything, and it's actually a difficult combination, difficult balance to find, because in financial services, confidentiality and security are, the top priority you have when you build any service. So it's always to find this balance between super open and very secure. And I believe that as API are becoming more mature, and this also GDPR for private personal data is getting more mature, we all evolving in the good direction from a consumer perspective, which is a very frictionless, very enjoyable experience, and still a very high level of security, much more than whatever level of security the banks provided us with in the last 50 years. If you think about it, today your card is basically protected by a 4-digit PIN. Well, honestly, in the digital world, a 4-digit password, and if you put that on any website, they will tell you, no, you can't use it, it's too weak. So there's a lot we can do to improve overall security while improving the experience, and that's what we're here for. And absolutely, the fact that different building blocks and available services can connect easily together through API and open API, and of course, even more so in the financial environment through PSD2 regulation, which allow to access banking data of consumers and use them through multiple other services, is something that is going to be central in the coming years. And the fact that this is my data as a consumer, and I should be able to do whatever I want with it, provide them to anyone I feel comfortable with, so they can provide me with the best and most competitive service. So overall, I believe we're entering a new era where the customer really have the power. And I have to say, from a consumer perspective, being myself a financial service consumer, I'm very excited about that.
Yeah, thanks for that, Cyril. And I wondered if I could put a question to both of you, and I want to turn to what you both think is going to be the next big card payment innovation. Real-time obviously has been key over the last few years, whether it be the visualization of spend data or blocking spend from certain merchants. So maybe you can tell us what you see on the horizon in terms of card payment innovation. Shall we start with you again, Cyril, and then pass to Ian?
Yeah, I mean, absolutely. I believe that the card itself will disappear per se as a piece of plastic with a chip and PIN code, because it's too old and it doesn't serve the purpose we need it to serve anymore. We have much better option. It takes some implementation of technology, but honestly, it will happen, I would say, in the next 5 to 10 years for sure. Don't see no plastic card at all. Nevertheless, the card rails and the card security and all the card scheme benefits, like of course all the dispute management and stuff like that, will remain, because it's extremely powerful, it's global. So I believe we're going to be edging into a situation where today the card is suddenly a good weak point for fraudster to attack, into a place where we'll still have the huge benefit of this massive acceptance network and quite well regulated environment without all the weaknesses, thanks to the digital technology and the digital security and mobile security. So it's stuff that we're already implementing. We're certainly halfway through that, but yeah, it will disappear, and one day you won't even know that there had been a plastic card.
Yeah.
Do you want to share some of your thoughts on where card payment innovation is headed and what we can expect?
Yeah, I mean, I think the first thing to say is I wholeheartedly agree with Cyril with respect to the plastic card disappearing over time. One of the arguments for plastic cards was always that people like to have this brand. It said something about them. Well, the reality is that that's what your mobile phone does. You know, you have people who are an Apple user, and that says something about them. People who are Android users, that's their way of saying something about themselves as well. So this notion of, you know, the physical plastic card doesn't really have a role to play moving forward. And it's too limiting in terms of how quickly you can give people access to funds. So the use of virtual cards pushed into digital wallets means that within seconds of opening an account, you're now armed to be able to go and spend anywhere in the world. And I think that's a crucial point about card payments is Visa and MasterCard, whether you love them or hate them, and you know, there's people sit in different camps. The fact is they've built this astonishing global acceptance network, and anybody who is trying to recreate anything anywhere close to that is going to be, you know, buried long before they get even close to 10% of their coverage. So we have to accept the fact that to innovate, we should use these networks. I think the other thing that we'll see more of, and it's already here today, but is embedded finance. So more situations where we don't really understand that we've just necessarily paid. It's just part of a purchase journey. I think buy now, pay later is increasingly common and popular amongst people. You know, the likes of Uber and Klarna, the work that they've done. You know, payments become more and more seamless, but it's all predicated on the network and that acceptance. So I don't necessarily think we're going to see something over the course of the next 5 years that is brand new that nobody expected. I just think those technologies that, as Phil mentioned, digital wallets, etc., they'll just become the norm. We just won't even remember having plastic cards. The mobile, you know, as Cyril said when he started the company, his prediction is completely accurate. All of our financial services will be through our mobile phone. So, yeah, that's how I see things over the course of the next 3 to 5 years for sure.
Thanks for that, Ian. And no virtual event in 2020 would be complete if we didn't ask a question about COVID. So thinking about, you know, the current situation, have there been any significant learnings that you've taken from changing customer behavior during the pandemic that's influenced your current or future product roadmap? Maybe we can start with you on this one, Cyril.
Well, what we've seen, and which is certainly not astonishing, is when people are under lockdown, they spend less. So there was a drop in transactions. And nevertheless, that was very expected, but nevertheless, there was a big change in the way people spend. We knew that cash will take a hit and will become, over the years, a marginal mean of payment, but it's a very slow process, depending on countries, even more slow, but it's happening everywhere. What COVID and lockdown did, they accelerated that transformation at a pace nobody expected. And that's really visible. The second thing is the rise of contactless payments. Contactless payments have suddenly quadrupled or been multiplied by 5 this year. What we've seen in our transaction is it's actually higher than that, but we got a mobile-only customer base, which makes sense. Today, 75% of transactions with Lydia cards happen to be mobile contactless transactions, which is probably the highest percentage you can find across the industry, which makes sense given the kind of customers and the reason why they come to Lydia. But what's really interesting here is if you look at the industry and the banks, they're pushing the contactless plastic card, which honestly, from a security perspective, raising the amount of this and even doing this is absolutely stupid. I mean, it shouldn't be done because it's zero security on your money. It's like you open your pocket and someone can take money in it. So this actually should stop and be replaced by good education for people using their mobile as a contactless payment method. It's more secure, and that's why, and you don't have the maximum amount because of that security, because it's biometric security. And this has been risen incredibly in our transaction set. What we also seen growing is online payment, but I think this is also a deep trend in the consumption habits of people. Of course, lockdown helped a lot on that front. Shops were closed, so you had to buy online. But what we've seen is after the end of lockdown, well, e-commerce didn't slow down. It actually kept on expanding because suddenly it helped people cross they were used to buy in stores, and they tried online and it worked smoothly. So, well, next time they buy online again, and it becomes a habit. So I believe this is some great news for online payment and contactless payment, and very likely some pretty bad news for stores. But certainly the biggest hit. But certainly the biggest hit and the deeper transformation happened with the marginalization of cash.
Yeah, absolutely. Ian, would you add anything to that in terms of how it's impacted Marqeta's perception of what their customers need, or impacted on your own digital roadmap?
Yeah, I think obviously Cyril mentioned that we witnessed a slowdown in transactions for some of our customers, but interestingly, we serve a lot of the on-demand delivery companies, so the likes of Instacart and DoorDash and Uber Eats, etc. So they just went through the roof because clearly people are having to eat at home rather than go to restaurants. And of course, we saw a huge rise in contactless. So I think part of the challenge and the reason why contactless payments on cards was pushed so strongly is that there isn't still enough of the traditional banking world that is able to offer digital wallets and tokenized cards. And that's something that we're trying to help from a Marqeta perspective for sure, so that digital wallets become the prevalent kind of payment method. But I think outside of the trends that Cyril mentioned, which I think we all experienced, I think the other thing we saw was more relevant to the fintech industry and the companies themselves. So we definitely saw, during the initial lockdown, a slowdown in customers making decisions about making commitments to work with Marqeta, but also just to slow their product launches. And really a lot of what was behind that was investors wanting to make sure that the companies that they invested in were giving themselves the longest possible runway to continue to operate. So, traditionally in the fintech space, organizations have got a long list of things they want to do, and they want to do them all now. And that costs money and it increases the burn rate. And when COVID came along, I think a lot of the investors said, okay, we need to just scale back this product roadmap to what's really core and essential, which I kind of hope in a strange way will mean that the fintech industry will be more robust when we come out of it, because those players that have addressed that will have a different way of running their businesses moving forward, which can only be for the good. Because to Cyril's point, whilst I do believe the traditional banking space is starting to make some change, the evolution of payments and the best customer experience are going to continue to come from the fintech space and founders like Cyril and his team and the many others that we work with. It's going to be a long time, if ever, that the consumer space can turn to traditional banks and say, wow, look at how quickly they just innovated this, this new piece of technology and customer experience for me. There's a lot of movement in that space. We shouldn't sleep on them. But it's really important that our fintech industry survives and thrives, because we need the innovators to keep driving payments and financial services forward.
Thanks for that, Ian. That's really interesting and feeds really well into the final question that I want to put to each of you. So starting with you, Cyril, thinking about open banking and its next iteration, open finance, it's fast moving towards the reality stage. What do you think the opportunities are for companies like Lydia?
Well, I believe we're in the position that we never expected we'll be in when we started the company, to be honest. We thought we'll do a nice app so people can pay with their phone. And now we believe we could be the financial hub for people, the mobile hub for people financial life. So, it's just make the dream bigger, but also, of course, it makes the responsibilities bigger, because the more people trust you with, the more you have to deliver. You have to deliver on experience, you have to deliver on security, you have to deliver on customer care. People always talk about technology, they forget a lot about customer care. That's even more true for regular banks. We know put a lot of artificial intelligence, where we expect that we put a lot more of human emotions rather than artificial intelligence in the relationship we have with our users, because, well, money is a cultural and sensitive matter, and you don't want something cold and unnatural talking to you about your money. You want something that understands the concerns you may have. So putting the human and the emotions at the core of this is critical. And I believe that the more technology is available, the more company like Lydia can put back emotion and human at the center, which is exactly the opposite of the direction that regular banks have chosen. They're closing the branches, they're putting artificial intelligence to answer to you. And all kind of crazy stuff that we certainly don't approve. The other thing that I wanted to add based on Ian comments is also we had some bad activity, poor activity during lockdown. Overall, 2020 has been an extremely strong year for Lydia. It's by far been the best year ever in the company. And when I'm saying by far, I mean more than 50% better than any previous years. Which at that scale is still quite impressive. We started the year with like 2.8 million users. We're going to end the year with 4.4 million users. That's more than 50% new customer on the overall user base. The company has been created 7 years ago. So it's been a very, very dynamic years. And I believe that this change in culture and understanding of the possibilities of mobile finance certainly increased by lockdown, and the fact that people had to adapt has been an incredible push for us, and give us, again, bigger dream for us, and the ability to develop incredible things thanks to open finance and open banking for the consumers overall.
Thanks, Cyril. Ian, turning to you, what do you think open banking, open finance, what are some of the opportunities that it presents for a company like Marqeta?
Well, I think generally from an industry perspective, I think the bit that excites me most about it is this next generation of financial services should really be about generally managing our financial well-being as consumers on our behalf. Is that, Cyril talked earlier about trust, security, privacy of data. We know from surveys that we've run that there's a very large proportion of particularly young people who are quite happy to share their data, their accounting data, if it's going to deliver some meaningful benefit back to them. So if you can deliver me value in the financial services you're offering to me, in the app that you're providing, then I'm going to be more inclined to let you have access to my data. And I think today a lot of what's been done is to share things like, okay, I can see what the balance is on my account with another bank. That's okay, but it's kind of not transformational, really. I think the transformational piece is where we share even more information than just our bank account information. We share things like our utility information, our other credit agreements, and we allow organizations to basically make or at least propose decisions about how we can manage our money better. Because at the moment, a lot of the first wave of digital banks was a massive step up from what we saw from traditional banks. But things like giving a real-time alert to say that you've just transacted at a retailer when I kind of know I've just transacted there because I was there, it's a kind of nice little gimmicky feature, and some people, put a lot of stock in it. But to me, the much bigger evolution is people starting to, or apps starting to suggest how I can use my money better. And to me, without losing the personal side, I think to Cyril's point that there's this thing of understanding that we manage our money for a very specific reason. Some people are managing their money so, incredibly tightly because of the situation they find themselves in. Other people have got dreams about how they want to use their money, what they want to save for, etc. And there isn't anybody really out there who's helping us to make sure we achieve those goals by taking all that data, understanding who we are and what we're trying to achieve, and helping to make those decisions for us. They provide the data, but they don't give the insight. And I think that, to me, is where the real opportunity exists, is how can the next wave of technology start providing that insight so we all, everybody, becomes financially better off.
Thanks, Ian. And I think that's a great note to finish on, this notion of being able to serve customers, not for financial services for its own sake, but to meet their life goals and help them live their best possible life. I want to thank you both for taking the time to join me today. So thank you, Ian and Cyril, and for giving us a sense of what it really means to be a digital builder in a fast changing and increasingly digital industry. So thank you again, both. Mm-hmm. Please stay with us on the main stage, because next we'll be hearing from financial providers about their journey to becoming open institutions. And I suspect they'll pick up on a lot of what Cyril and Ian have shared with us today. Thank you again, both.
Thank you, Lisa.
Thanks, Lisa.